Alright, so it's final countdown to BTC halving, but what exactly is BTC halving anyway? So little time left and so much to say about that. So today is gonna be BTC halving 101 lesson. So everything you need to know about that event to be fully armed and prepared when it happens. So yeah, it happens super soon. Yeah, it's not only game changing for miners, but also for Bitcoin investors and all crypto community in general. So no time to waste, let's get going. All right, so you may have already heard that every 4 years or so there is a Bitcoin halving, but what it is, how does it work, and how does halving affect Bitcoin? And yeah, before we jump into Bitcoin halving, let's first understand the main mechanics behind the scenes. First, and it's blockchain. So at its core, the Bitcoin blockchain is definitely a public ledger containing the history of all Bitcoin transactions. So think of it as a chain of blocks where each block contains a list of transactions. So yeah, once a block is filled, it's added to the chain in sequential order. Then there is a mining concept. So mining involves powerful computers solving complex mathematical puzzles to add blocks to the blockchain. So miners collect transactions into blocks and add them to the blockchain. And each time a block is added, which is around 10 minutes or so, miners are rewarded with BTC. So this keeps the system functioning, rolling, and also introduces new coins into circulation. Besides, the BTC mining process follows a protocol called proof of work, ensuring that creating new blocks is challenging and resource intensive, hence securing the network. Finally, you need to know that Bitcoin has a supply limit. That's right, Bitcoin's ultimate cap is set at 21 million coins, which introduces scarcity to the system. So this scarcity is expected to increase Bitcoin's value over time, especially as demand from large-scale investments grows. So yeah, in short, BTC halving is a process that involves reducing the reward for creating new blocks in the blockchain. And it is needed to it ensures the supply of BTC is gradually released. Then B, prevents sudden increases in the overall circulation supply. And C, it extends the longevity of rewards and the blockchain in general. And by the way, many cryptos such as Litecoin, Bitcoin Cash, and even Dogecoin have implemented similar halving mechanisms. However, Bitcoin, as a pioneer of the entire crypto industry, of course steals the spotlight. Okay, so get it, but why do we need BTC halving anyway? Well, is it fair to these miners to receive lesser rewards after halving? Well, it seems unfair. The answer lies in controlling inflation. So as I said before, the scarcity and increasing difficulty of mining each subsequent unit aim to preserve this value and store of wealth characteristics that Bitcoin was designed to achieve. So for instance, if Bitcoins were created in unlimited quantities, their value will just decrease over time. So that is why BTC, in a way, sort of mimics the scarcity of hard money and rare commodities like gold. Thus, BTC halving is programmed into cryptocurrency's code, and it is a predetermined event, and it is not influenced by any central authority or external factors. Of course, Bitcoin halving has an impact on the profitability and economics of Bitcoin mining. So miners need to adjust their operations and strategies to compensate for the reduced block rewards. But yeah, that's how the network operates from the very beginning. Next question is, how often does BTC halving happen? As we know, BTC halving is designed to happen when we reach new 210,000 blocks. This will happen roughly every 4 years. So here goes numbers. So on average, to create one block, it takes around 10 minutes or so. So this means 144 blocks are mined per day. From 2020 to 2024, there are 6.25 Bitcoins per block. So 144 multiplied to 6.25 is 900. So that's the average amount of new Bitcoins mined per day. But this wasn't always like that. So diving deep in history, the first Bitcoin halving occurred on November 28th, 2012. So the miner who successfully mined the last block number 209.999 was rewarded with 50 Bitcoins. However, the very next block, number 210,000, the reward dropped to just 25 Bitcoins. So, yep, that was actually real. Just imagine such rewards right now. Anyways, this marked a historic moment for Bitcoin and set the stage for the future halvings. The second, in 2016, reduced the reward to 12.5 BTC per block. So the third one, the most recent halving that occurred on May 11th, 2020, further reducing the reward to like 6.25 BTC per block. And yeah, quite soon, this will drop to just 3.125 Bitcoins, marking the fourth BTC halving in the history. So I think you get it. This list will go on and on and on until we reach the year 2140. So the estimates suggest that the last Satoshi, which is like the smallest unit of Bitcoin, by the way, it will be mined, marking the end of the entire BTC coin production. But yeah, wait a second, is it gonna be the end of the entire BTC history? Well, actually no. In addition to receive rewards for creating new blocks, miners also receive transaction fees, which depend not on the amount, but on the weight of the transaction. So it will be fees that will allow miners to continue to support the network when all Bitcoins are mined. Well, I'm not sure if we'll ever witness that day anyways. Okay, now let's shift our focus on the main question. So how does halving affect the price of Bitcoin and what we can expect from the market next? Okay, so looking back at effects of previous halvings can give us a hint about what might happen this time around. Historically, halvings have led to impressive rallies in Bitcoin's price. That is why many crypto enthusiasts and investors anticipate that event with excitement. Plus, like more people become interested in cryptocurrencies, more new money enters the market, and so on and so forth. For example, the very first halving in 2012 saw Bitcoin's price just skyrocket from just $11 to over $1,100 within a single year. Fast forward to 2016 and a similar pattern emerged. So with prices peaking at $20,000 about 18 months post-halving in 2017. Fast forward to 2020 and a year after the halving, so we saw just another peak at about $66,000 in December and well, climb back. So I think you get it. Each event significantly reduced the new BTC supply entering the market, which historically has led to bullish price movements. But yeah, after some initial volatility. So you know the drill, after the new highs are reached, there goes a downward trend as Bitcoin enters a correction phase. So the price reaches its lowest points and grows back, goes on and on again. So yeah, history repeats itself. Okay, but what's different this year? Although historical patterns can provide some insights into possible scenarios, well, past performances do not guarantee future results. For instance, as we approach the 2024 halving, BTC has already achieved new all-time highs. It's just a unique scenario compared to past events. This could suggest that the market might have already priced in the halving effect, or we could still see significant volatility with potential new peaks. And don't forget that market dynamics are also influenced by macroeconomic factors such as regulatory changes, global economic conditions, the influence of the media, and besides BTC, ETF impact enters the scenes. All these factors make this halving particularly interesting and unpredictable. So could the BTC price fall after halving? Well, maybe, but it also could never fall below 60K ever again. And will we see BTC double in price and the new all-time highs this year? Well, quite likely at the end of it, but obviously only time will tell. But yeah, I know one thing for sure, the crypto world will be watching closely. So yeah guys, it's just moments before the 2024 BTC halving, so here we go. Hope this is gonna be a good one.